Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla and let's go over the market and let's figure out what has happened and what we can expect moving forward. So as usual, if you enjoyed the video, don't forget to hit that like button. It does help a lot. This is not financial advice. I'm not a financial advisor. And again, my membership section on YouTube, link down below, is live. If you're interested in that, $2.99 a month. I essentially share my intraday thoughts, give updates on the chart and all that stuff intraday as it's moving live. So yeah, if interested in pretty much live updates, if you will, the link is down below. But nonetheless, moving into it, let's talk about Tesla. Down about almost 3% on the day, putting us at about 300 and just shy of 354 per share, which compared to the market, arguable outperformance. I mean, QQQ is down 2.22%, so Tesla being down only 2.77% is not too shabby. Honestly, not atrociously bad. However, with that being said, let's go to the 65-minute chart very quickly. Actually, the daily chart first. Let's do the daily chart. We have the 21 EMA. Like I said many times, right? If we can't close above it and hold above it, and especially go above 270, it's not looking great, right? I'm probably going to play out this little bit of bear flag, pennant, whatever you want to call it, and move will continue to the downside. Now, so far that has happened, and the question I'm sure a lot of people are asking, well, is this it? You know, is this the move? Is this all it took? You know, is this the bottom essentially? There's a couple of things. So on the back to the daily chart, on the 50-day moving average, you can see we pretty much came right down to the 50-day moving average, right? This is what I shared with my subscribers. Just the actually today, let me go back to the here, right? I talked about how we have the 50-day moving average right here around 248-ish, right? So it's just above, actually. So actually closer to 250 even, right? But nonetheless, we were just about $1 or so off of the 50-day moving average, which I also talked about in yesterday's video. And we kind of bounced off of it, and I did buy that dip one more time. And you know, I'm obviously, like I said, going to continue adding on these dips for the longer play. Now, with that being said, we did bounce off the 50-day moving average. Now, that this doesn't mean it has to be the bottom. However, you know, as long as we don't break below the 50-day moving average, it could be, right? The thing you want to look at is just, do we ever lose the 50-day moving average? Do we ever go below it and start closing below? Kind of similar to what we did with the 21 exponential moving average, right? How, you know, we were above it, we kept rallying even further. And the second we started closing below it, that's when things started getting a little bit, you know, not so good. And then we continued even more so to the downside. So same idea there, right? So just keep that in mind. If we start closing below the 50-day moving average, we potentially can absolutely go even lower. So that is absolutely something that you would want to be paying attention to, right? On the flip side, we also have, of course, the 100-day moving average sitting at about $214 per share roughly at the moment, which is slowly going to continue going upwards to meet us as long as we're not really falling too aggressively to it. So in other words, like I said before, you know, I personally think the bottom will be in sometime, maybe this month, probably next month though. And I do think that, you know, for the most part, this is most likely not the bottom. Again, there's a very light possibility, again, with the 50-day moving average, but I don't think it is. I do think we're going to go a little bit lower, at least to 240. Like, I really do think we'll revisit potentially 240, like 241, 242, 243, something like that. The low 240s is absolutely in the equation, right? Which is why I still have dry powder left for that, you know, situation if it does come to it, but also why I am slowly buying the dip here, because this potentially has a chance to be the bottom, maybe like a 15% chance or something like that, maybe 20% chance, not super high, but definitely not zero, right? Again, if we do lose the 50-day moving average, let's bring it up one more time, then I do believe that we will come down, potentially fill this gap as well, and then this gap maybe slightly below it with, of course, the volume by price, which you can see over here, right? A lot of empty volume around this area, right? So the gap fill can potentially serve as a potential bounce area overall, because just that's how gaps usually work, right? Acts as support or resistance based on how you're going to it. In this case, we're going down into it, which means it acts as a support. So even though there's absolutely no volume in this area, which means there's not a lot of shares that are usually bought or sold in this kind of, you know, general vicinity, means you can go right through it just as fast as we went right above it. But with that being said, gap fills tend to usually act as a pretty major area, right, that people really eyeball. And this is a pretty massive gap that we did leave behind. So, you know, again, to make it simple, the levels I'll pay attention to is this. We have the 50-day moving average pretty much sitting at 249, right? If we break below that, I think 241-ish, 242, something like that is next. If we break below that, that's when the empty gaps or empty volume starts to act, right? And luckily for us, we still have this gap fill at 234, which can potentially be a bouncing spot as well. If that's lost, I think we go down to the 220s area. And if that's lost, I think we come down to this massive area of volume all the way somewhere down here to potentially meet us somewhere in between this and the 100-day moving average, which is sitting again in the very low 200s as of right now, about 213 or so. Those are kind of the overall steps, right? Nobody knows where the bottom is. That's why I'm giving all these levels, because it really just comes down to what do we get there? Is it breaking? Is it holding? How is the chart looking at that specific level? Nobody knows for sure which will be the bottom. Is it going to be just this 50-day moving average? Will it come down to 240 and that's the bottom? Will it come down to the gap fill and that's the bottom? Will it come down to 220s? Maybe that's the bottom. Or will it come down to the 100-day moving average around, the 215-ish, give or take. Maybe that's the bottom. Nobody knows. And if anyone tells you they know, they're full of it, right? That is just incorrect. Nobody knows. The thing you do is you react, right? You see how it gets there, when it gets there. And if it starts showing promising signs, like it's, a lot of buyers are stepping in, the candles starting to look bullish, like you have a hammer candle or something like a doji candle on a downtrend, for instance, great. That's probably going to be potentially a sign of a bottom, right? And that's where, maybe we get a beautiful bounce from there. If it's still looking weak, if there's still a lot of potential scary catalysts on the horizon, like for instance, Apple, Amazon earnings, or, something like that, maybe CPIs coming out, things like that, then you want to be extra cautious, right? But until you see obvious signs that it's at a major support level, any of those levels I just mentioned, and it's showing signs of a potential bottom, which again, I'll talk about once we do get there, and we do, and if we see them, as of right now, I don't see it personally, then then that's a different story. So just keep that in mind, right? That's why I always give these levels, because nobody knows for sure where the bottom is, right? Nobody knows. That's just, anyone that does, they're lying. They're just straight up lying. They have no idea, right? Now, with that being said, let's go ahead and remove all these bad boys right here. Now, going over to the 65-minute chart. Oh, by the way, the daily, the RSI, the daily, still making lower lows ever so slightly, which kind of makes sense though, considering we did make a lower low on the stock as well. So it's kind of just following the stock at this point. Nothing too completely out of the ordinary. However, with that being said, we still have an overarching bearish divergence, because even though we're still all the way up here, actually there's something else I'll talk about, but even though we're still all the way up here, this is all the way down here, right? We're below this level over here when the stock was lower, but this is, I'm probably explaining this extremely poorly, but essentially, easiest way to put it, there's an arrow that's going to the top right over there. I don't know if I can draw here or not. Yeah, you can, but this is going to the opposite side. Hopefully that makes a little bit more sense, right? As this is making higher highs, higher lows, which is technically a good sign. This is making very obvious lower lows, lower highs. So take that for what it's worth, right? That is a very classic bearish divergence that is still in play, in my opinion. I don't think it's over just yet. Now, another thing to pay attention to here that's important is the fact that we have a potential head and shoulders pattern, right? We have, the shoulder here, or one shoulder here. We have the potential head right here. And then we have the potential other second shoulder that just formed on this consolidation that we just had. So we have shoulder, head, shoulder, head and shoulders pattern, and the neckline, hard to say exact. Ooh, that's not good. I don't want that. I don't want to remove that. I'll have to put it back later. But the neckline is of course going to be either the 240, or you can take this and then draw it across something like this, and then you can argue that the neckline is pretty much exactly where we're at right now, which is around that 250 level, right? You can make both arguments. Which one is the correct one? Hard to say. Maybe this one, maybe it's 240s, but regardless, you really don't want 250 and you really don't want 240 to break, like especially 240. If 240 breaks, we're definitely going to be falling pretty aggressively. So keep that in mind as well, ladies and gentlemen. But that's kind of the major things I'm seeing over there. Over to the 65-minute chart. I talked about this yesterday, how overall we are in this kind of bear pennant, bear flag, whatever, right, where we had the massive fall from earnings. That was the pull, and then we're essentially consolidating, creating either a pennant or a flag, right, a bearish one, of course. And then today we did fall below it, and as you can see, not only did we fall below it, we came back up to retest it in the morning of the day. We had a bit of a bull trap in the morning, came back down, fell even lower, came back up, and now we're kind of retesting the bear flag itself, right, which is the lines that are parallel to each other, the ones that are going strictly horizontally, right? And we are so far retesting it, and we'll see how that actually plays out tomorrow. Again, keep in mind, Apple and Amazon earnings are tomorrow. Pretty major earnings, to say the least. Let's just say that. Absolutely astronomical earnings coming up, especially Apple, right? So all eyes will be on that. I promise you that. That is going to be something that everyone and their mother is paying attention to, because Apple is pretty much an index at this point in itself, just with how much weight it holds in the market. So just keep that in mind as well, ladies and gentlemen. But that is essentially the major things I am looking at right now, and I am seeing. That's not what I wanted to look at. Actually, I wanted to look at the squeeze right here, which we'll pull this up one more time. You can see the dot is now green finally, which implies that the squeeze direction has been picked. It has been chosen clearly to the downside so far, and the squeeze, in theory, according to this, seems like it wants to continue. The MACD is still looking pretty bearish overall. It is making lower lows essentially on the MACD, like the red bars are getting longer again, which isn't great to see. And ultimately, I'll be surprised if this is the only downward pressure we get. I'd genuinely be surprised. Again, the thing I want to make very clear is that this doesn't mean that this has to be a complete and utter move to the downside, instantly just complete collapse. We just completely, plummet to 220, everyone buys a dip, and then it just skyrockets and everyone makes money. It's not that easy. I wish it were, but it almost never is. Right? Sometimes it is, but very rarely is it that simple. There's going to be a lot of complications, a lot of things to make you second guess. Is it happening? Is it not happening? Is it going here? Is it not going here? Maybe this is it. Maybe it's going to continue falling. Maybe this is where there's going to be a lot of conflicting things like that, right? To make this as difficult as possible. So just keep that in mind. It's not going to be as easy, and it might take also a bit more time than you would think. Like I said, August is usually the start of volatility, and September especially. And overall, the market has been pretty bearish almost every September, right? It's an overall pretty bearish month for the market. So just keep that in mind. I don't think this is going to be it. It doesn't mean we have to fall right away, but ultimately, I think the downtrend is still going to continue for now, at least for the next month or two. Just my opinion. Again, could be wrong. I personally will be continuing buying the dip because I don't know exactly where the bottom is until something is formed, and I can with confidence say that this is potentially the bottom. But for me personally, I will be continuing to buy this dip, and almost likely will be selling calls against my shares on any green that we have from here as well. But all that being said, thank you all so much for watching. If you enjoyed the video, don't forget to hit that like button. And of course, as per usual, I'll see you for the next one. I'm going to very briefly actually touch on Disney here. I saw some people asking about it, but essentially Disney broke out just the other day and then actually retested it and it looked pretty damn good. But of course, we had the whole market pretty much selling off today on the news of the downgrade of the essentially the US market, if you will. And yeah, we pretty much had a massive sell-off in the market, and then Disney, of course, coming back right into this wedge, which isn't great to see. False breakouts are pretty bad. Definitely don't want to be seeing those, but ultimately I still think Disney is not looking too shabby. It's just, with the market potentially on this flimsy situation, I still think that there's potentially a bit more room to the downside. Not looking at Disney too much, especially with Tesla falling. If Tesla's falling, I'm a lot more interested in Tesla than Disney. I don't care much about Disney. In fact, I actually prefer Netflix over Disney if I had to choose between the two. But with that being said, that's kind of what I am seeing for Disney as well. But thanks so much for watching, and I'll see you tomorrow. Peace.